All right. Well, I already waited 5 or 10 minutes for other people to get in here. If they get in, they get in. If they don't, they don't. I'm already going to just start recording this. I think Kaizen just joined. So hello, good morning. So it is Friday. I think it's Friday, right? It's Friday. Yeah, today's Friday. Happy Friday, everybody. Make sure you got your cup of coffee. We've got a lot of stuff to go over today. As predicted, not too much went on with all of the legacy market news. Didn't really affect the markets too much. We've pretty much just been shopping around and going sideways. So today we're going to go over some analytics, everything that's happened next week, try and get a heads up on what's going on, for next week or whatever in the news, if we need to prepare for anything. Take a look at volume, see if the volume is, increasing today or decreasing because we're going into a weekend. And just see where we can kind of either position ourselves for the weekend or once we get into next week. So hopefully nothing goes wrong with the stream today. Yesterday I didn't do any content. I was troubleshooting my system all day. Just a little precursor before we get into the analysis. I was having tons of issues for some reason with my computer. Apparently it was the fan curves and my GPU, my graphics card was like overheating. So I had to take it apart. I repasted it. I put on new thermal pads, and magically delicious. That made all of my errors disappear. That made my screen shutoffs stop. My computer was crashing anytime I would load a game. That stopped. I was getting Microsoft.NET errors on boot up. Those stopped. So it looks like they fixed the problem. I got all the fan curves right, keeping the system really cool now. So you guys don't really give a shit about that. So let's go ahead and get right into the charts. Let me go ahead and switch my view here. And here we are. So this was the first thing that I saw today on my Twitter feed, which was awesome. I just wanted to point this out real quick. For those of you who don't know, Andrew Yang was he was one of the guys that was running for president. He ran for president in the last election. And Rachel Wolfson, who I've met in person, very nice lady, actually got to interview him in the Bahamas at the the crypto Bahamas conference or whatever. So kudos for her. That's really awesome. Big step for her in her career, for Cointelegraph as well. So that's really, really awesome. Andrew Yang is a really good guy. I'm not a super fan that he's like a socialist, but I do, from a political aspect, he's got a lot of solutions to a lot of the problems that we have in this country right now, which I really respect. Not so much on the whole, like, let's have government programs for everything, because that's socialism. That's not something that I'm for. But in terms of the economy, new forms of payment systems like Bitcoin and digital currencies, how to fix the economy with jobs so that our jobs aren't getting automated away. He's got fantastic solutions for all that stuff. Honestly, if he runs again, I'll probably vote for him, depending on who else is also running. But anyway, so let's get into the economic calendar here. Today, we don't really have anything else going on. Obviously, there's nothing going on, over the weekend and stuff. So let's look towards Monday and see what we have going on here. Normally, if I'm not in a position, which I'm not, I was still in the process of moving this week. So no, I'm not in a position right now. I may take a couple scalps today if I can swing it, if I have the time, but I've got a lot of real life work that I need to be doing. So for Monday, we have retail sales. That's going to impact Europe mostly. And then we've got a lot of stuff going on in the European Union, right? So we've got manufacturing numbers and consumer confidence numbers coming out, which is really good. And then we also have our manufacturing numbers for the US coming out as well. And that's pretty much it. That's going on Monday and Tuesday. There isn't really too much else that's happening here. Factory orders is kind of a medium one that normally has to do with like automobiles, anything that's produced in a factory, like, big stuff, trains, cars, boats, big machines, equipment. If you guys are familiar with the company CAT that make like all those excavators and all of that stuff that, when they make job sites and stuff, all those big companies that make all those big things, that's really important, because that's going to be an indication, believe it or not, of if there actually is a need for construction materials and things like that. That's kind of where those numbers point. So that's actually something that I look closely to, because that relates directly to the real estate market, because you need excavators to build new developments and homes and, bulldozers and all that, dump trucks and all that shit. But as well as like planes and trucks and, all of those things that help our infrastructure. So those numbers are kind of an indication of where we're going, not only in the real estate market, but also for our supply chain as well. Okay. So I know these numbers are boring. Most people don't like to take a look at these things, but they are really important. And if you guys want to learn the markets and be able to trade better, you have to understand what is moving the markets. What's moving the markets are these statistics that come out month over month, year over year, quarter over quarter, that have to do with manufacturing, that have to do with consumer price index, that have to do with inflation, that, it all is interconnected. Okay. It's like a big domino rally. The CPI numbers, the manufacturing numbers, the retail numbers, the real estate numbers, like all of these things, and obviously oil and commodities and stuff, all these things are interconnected into the global market. So in order to be able to understand that better, it's good to just at least familiarize yourself with this stuff so that you can kind of get a heads up on the market and say, oh, okay, well, next week our X numbers are coming out and Jerome Powell is making a speech. Okay, so where do I want to position myself? Do I think it's going to be good based on looking at, some previous charts and some last, numbers from month over month? If what happens when I put these together, what should I be expecting? And you'll be able to better position yourself in those times for the market and be able to make better trade decisions, not in crypto, but across all markets. Okay. I'm a very technical trader. Obviously, I take into account fundamentals and analytics and stuff like this. However, it's all interconnected, right? So when you're trading one chart, like the Bitcoin chart, when you know how to trade a chart and you've got like your own trading system down with how you trade, now you can start incorporating these things and keep them in the back of your head and say, okay, based on that, how do I want to position myself based on what the market is doing, right? So that's why I look at those analytics first. But we're done with this. Again, all those links in the Discord, in the welcome category, in the free links section. So let's go ahead and close this and we'll take a look at what our funding rates are like right now. So we'll show predicted and show following. Let's see. OKEX is going down. Bybit's going down. FTX, I'll check on the actual exchange. Gate.io is flat. For token marginized, OKEX is already flipping now, or it's going to flip within probably 30 minutes or so. So that tells me that the price is probably retracing here a little bit, and we're probably seeing a little bit of downside compared to last night. So to confirm that, let's actually look at our liquidations real quick. I want to see what's been going on in the last 4 hours here. 1 hour, 6 million, 4 hours, 39 minutes. This is really low. So that tells me that there's not too many liquidations on either side of the price right now. That's probably why it's retracing or chopping around a bit. Is because these numbers are really, really low. I mean, in 24 hours, we haven't even had a $250 million. So really low there. Let's take a look at our longs versus shorts across the different exchanges. We'll sort this by the hour for the beginning of the day here. Looks like Kraken is short. Huobi is short. Bybit is even. BitMEX is short. Bitfinex is really short. Deribit is long. Binance is long. FTX is long. OKEX is long. So kind of a toss up here. Half the exchanges are short, half the exchanges are net short, half of them are net long. So kind of a toss up here. Again, that shows indecision in the market. Just from looking at stuff like this, you should be able to get an idea before you even look at the charts. And that's a way for you guys to test yourselves, right? So as you guys are looking over this kind of stuff every morning, I urge you to do this kind of stuff before you look at your charts, because it's basically a check for yourself, right? So like if you can get an understanding of where you think or what you think the price action is doing based on this, and then you look at the chart and you're right, that means that you're interpreting the information correctly, okay? And that's a good thing. That's the only way for you to learn, okay? And then if you're wrong, you can go back and then look at the analytics and be like, okay, what did I interpret wrong? Why doesn't the chart line up with this? And kind of, deduce that and figure it out. But I really urge you guys to do this. This is all part of trading, guys. This is all part of trading. It's not just charts. It's not just, going 100x on fucking shit coins and trying to turn $1 into $1 million overnight. If you want to do it the right way, it takes longer. You got to learn. You got to get a strategy. You need to look at analytics. You need to look at fundamentals, even if it's just real quickly like this in the morning. So I would say we're pretty much done with this. I'm not even going to look at the order book right now. So let's take a look at our liquidations. First, I want to look on BitMEX. There's no way that that's right. Let's go up to a 1 hour chart and let this thing redraw. There's no way there's only one liquidation on the table. Yeah, no, there isn't. Okay, it was zoomed in too far. All right, so yeah, that makes sense. So I think it was earlier in the week. I think it was maybe Tuesday or Wednesday or something when I did a 90-second analysis, and I said, hey, we're probably going to come down and sweep this, but we have a chance to be coming up, and sweeping anything that might be around 39 or 40K. So we did that. We tapped that 39, 40K target, immediately retraced hard, and now we snagged this one long or whatever that was down here at about 38.7. So 38.7 earlier in the week, that was a target retracement area that just got hit, I guess today or over the night, last night. So that was satisfied. Not too much else going on here. We've got some short liquidations up around 41K. We've got another long liquidation around 30, what is that, 37.5. So that's actually kind of deep compared to like where we are now. That's, like a $2,000 move. We've seen that before, but it's looking like we're actually moving to the top side here. So let's take a look at our liquidations on Binance. Let's run this one more time and just get a better idea. All right, here we are. So let's zoom in. We'll just take a look at this. Okay, so we've got these two clusters down here, down to about, I guess, 38.4 or 3. Okay, so there's a nice liquidation cluster here, about 38. I guess that would be about 38.3 to 38.6. Okay, so a couple $100 pocket here of liquidations. There's a little support area here. Why is it support? Well, there's no liquidations there. Okay, it's a blank area. And then there's another little liquidation cluster here down to about 38K, and then 38K is that support. Okay, so if we're going to move further to the downside, this bottom level here, around 38, what is this, 38.4, this is probably where I'd be putting my ladders, 38.4 and like 38K. So maybe 38, 38.5, just to, for some simplicity reasons. And then let's look at our shorts to the top side, right? So shorts to the top side, there's really not too much of anything in our immediate area here. The first one that we have is a 100X at about 39.4. So pretty much the same area that we just tapped and then retraced from. And then besides that, there's just like some scattered ones, some light ones until, what is this up here? About 41. Yeah, about 41K, 40.3. And then there's like a big wall of flats. Like this is when bigger shorts start puking. And I guess that would be above this previous high. That's where all their stops are, right? This is why you don't normally want to put your stop just above a range high, because chances are it's in a pocket of liquidations. Similar to how if you did that here, you'd be in a big pocket of liquidations and at a higher risk of getting liquidated. Okay, so shorting here, you probably wouldn't want to do that until you start seeing a throw over and start seeing some of these shorts clearing out or whatever. In our immediate area, obviously we'll go over that all on the lower time frames here in just a minute, but you guys know how I roll, and the first thing that I want to look at is our daily chart. We already took a look at the weekly. The weekly obviously isn't closed yet, so there's no reason for us to be looking at that yet. Hold on one second here. What time frame did I have these on? 1 hour? Okay. Got to organize my chart. Always keep your chart organized, guys. This is something that I struggle with as well, but you see me doing it. It only takes like 1 second. If I've got the time to do this on a stream while I'm recording a video, I know that you guys have the time to do it on your laptop or your phone. Anyway, back up to this daily chart. Let's see what we got here. So price action first, right? Not too much obviously has changed with this. This has pretty much been our range that we've been in since, what is that, January? Yeah. All right. January. These trend lines originally, I explained this in the last stream, originally got drawn on the 22nd of February. They've been here ever since. no matter where this line is. I went over this in the last live stream. No matter wherever this line is, this was basically a bearish retest for a rejection. And now we're in our lower half of this range here. Okay, so again, we're really teetering on the edge here. We had this this big fake out here to the top side. Everybody got excited. Everybody got super bullish here, as well as I did too. This was a bullish, we were coming in for a bullish retest on this daily candle close. That was the long. My stop was below here. Obviously, I got stopped out. That was the short. And that's okay. Like, you're not obviously going to win them all. I was kind of hoping, along with everybody else, that this pattern was going to get invalidated and we were going to end up bouncing, pulling an end to end on our Ichimoku cloud and all of that other good stuff, which I'll talk about here in a minute. But for the most part, obviously that didn't happen. We retraced basically a full 100%, kind of staggered here on our trend line, had a fake out to the upper resistance and then broke down, bearishly retested it, and now we're moving down further to the downside. 1, 2, 3, 4, 1, 2. 1, 2. This could be a 1, 2, 3 to end. So maybe we're getting the last part of a third wave here and into here. I wouldn't necessarily be freaked out if we made a lower low compared to here. But if we start making a lower low compared to this level at about 37K, that could be a little more dangerous than I would like. But at the end of the day, this is our overall range. Unless we're breaking this low at 35, which is a good ways off from us right now, I'm not really too worried. Now, technically, this is a bearish pattern, okay? Most people have been counting this like me, where this is a 1, 2, this is a 3. We're getting this big, triangle or whatever 4, and then we're going to come in for a 5 and really, smash through a lot of levels and capitulate. Personally, that's what I would really like to see. I really don't feel like enough people have gotten washed out of this market yet. There's still too much bullshit on crypto Twitter. There's still too many big influencers that are just yelling buy, 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 like Jim Cramer on CNBC. There's too many. Basically, what I'm trying to say is there's too many fuck offs and retards that still have skin in this game that haven't gotten washed out yet. There's still in my opinion, there is still too much dumb money that is in the market, and most of it is on the Ethereum network with all the NFT bullshit. People dropping 6 figures on a picture of a fucking rock. Okay, there's too much dumb money in the market right now that hasn't gotten swept out yet. So I would really like to see some kind of market capitulation. Now, what do I mean by a market capitulation? This is one of the things that I wanted to go over. Those of you that were around when this happened, most of you were. Okay, this section over here. Now, everyone calls this the Elon dump. This wasn't an Elon dump, okay? Like, yeah, Elon sold some of his cryptocurrency, or Tesla sold some of its holdings or whatever at the top. First of all, that was a smart move on Elon. He took profits, he paid himself or paid his company. He got out almost at damn near the top. We pretty much haven't come back to retest a lot of these levels since he exited. However, he was not the cause of this drop. For those of you that were around during this, you may have remembered that is when China officially said, okay, all of these provinces, and there was like 10 or 15 of them, no more Bitcoin mining. This was a mining capitulation. There's 2 kinds. Let me just explain this real quick. Okay. There are 2 kinds of capitulations. Okay. There is minor capitulation, and then there is market capitulation. Now, these are 2 very different things, obviously, right? So minor capitulation, what does that mean? Basically, exactly what happened in China, right? It was a big news event. It was a black swan. China was officially saying, okay, we're banning mining in X territories or whatever. Well, what did those miners do? They shut their miners off. The hash rate dropped and the price dropped because all of those miners were dumping supply onto the market. And most of that supply is what's been suppressing the price this entire time. They sold. They waited, they sold here, then they sold here, then they sold here. And these are every single pump that we got. All of these were exit pumps for miners. Okay, so this entire structure up here, every time the price has been moving up, they've just been selling, right? So price goes up, they sell, there's resistance there because there's more supply in the market, okay? Now, market capitulation, what does that mean? Market capitulation is what you see in like altcoins, for instance, right? So there's a news event or there's a hack, there's some kind of black swan event, something random that happens, and it forces people to exit, or it scares the market enough for people to sell their holdings. If not all of them, the majority of them. And that's what a market capitulation is. Okay. So minor capitulation, market capitulation, two very different things. We've already seen here on this chart. Okay. We've already seen this market capitulation. Okay. We haven't, or minor capitulation. I'm sorry, minor capitulation. Okay. So we haven't seen, excuse me. My daughter is playing underneath my desk. This was our minor capitulation. Okay, so we haven't seen a market capitulation yet. Now, what would trigger a market capitulation? Well, you have to think about this from an institutional aspect. Okay, so when you've got institutions that are offering Bitcoin in their 401k packages, like TD Ameritrade and Fidelity, and I think now BlackRock and a couple others, or whatever, they're all offering Bitcoin as as an investment vehicle, as a part of mutual funds and 401ks. That's a big deal, right? Well, those companies have to have holdings to either back up the Bitcoin or own Bitcoin to back up the cash that people are putting into those funds or 401ks and accounts and stuff, right? Then you have other holders that are institutional as well, namely Michael Saylor and things like that, right? So Michael Saylor, he owns a shit ton of Bitcoin. And actually, if you go over here to, where is it? Where the hell is that? Here it is. If you bring this up, pretty sure it tells you here. Okay, yeah, so ARK Investment Management. So that's Kathy Wood, okay? ARK Investment Management, LLC. That is Kathy Wood. She has... 4 million. Oh, Bitcoin treasuries. Sorry. I was looking at the wrong page. If you go on coinglass.com and you go to Grayscale and click GBTC investors, okay, this is the list of all of the Grayscale investment companies by it shows all the companies that have Bitcoin on their balance sheet. Okay, that's the easiest way to explain this, I guess. Obviously, MicroStrategy is up here at the top, okay? 129,216 Bitcoin. They own almost 1%, just over 0.5% of all of the Bitcoins that are in the circulating supply. That is a very large amount, okay? There's 21 million Bitcoin. You do the math. It's a lot, okay? It's a lot. Anyway, then you've got Tesla, obviously, okay? So Tesla and Elon Musk owns about 0.2% of the total circulating supply at 43,200 Bitcoin. And all of these companies, right? You've got Square on here. You've got Coinbase on here. You've got Hive, Galaxy Digital, Bitcoin Group. That's the one over in Germany. Let's see, Cypherpunk, Fidelity. Okay, Fidelity is actually a big holder. If you scroll through here, I mean, there's a lot of companies that you'll probably be able to pick out and say, oh yeah, I know them. Look, it's BTCS. Or, oh look, it's Citadel. Like there's a lot of these companies that own a lot of Bitcoin on their balance sheets. Now, here's the thing. Today's value, right? So like their basis price was, almost what is this? 100,000. So 4 billion. Today's value, it's about 5 billion. Here's the thing. When these numbers start getting close to their break even, right? So when they start losing money on this, right? Like right now, Michael Saylor, he spent $4 billion in total. He's made $1 billion, okay, off of his total average buy-in price of how many Bitcoins he owns, okay? When these numbers start getting closer to these numbers, okay, and they start getting close and close to their average buy price, that's when they start getting worried. Now, what happens then? Okay, well, what happens then? What are you going to do? When the price, let's say you bought, let's say you bought in here, right? And this is your average buy-in price. This is where you're accumulating, right? At these major weekly demand areas. Well, guess what? If the price comes down here and then it rejects, you're selling. because now you're losing money on that trade, right? Like you're going to sell, you're going to capitulate. So here's the thing. A market capitulation right now would mean that these institutions here that have major Bitcoin balances on their company's balance sheet, a market capitulation now would mean that those institutions are capitulating and getting that shit off of their balance sheets and saving face with their investors. At the end of the day, they have to do what's in their investors' best interest. That's what it means when a company is publicly traded. You're doing whatever your company needs to do to make sure that your shareholders are satisfied, right? Well, Michael Saylor, for instance, he's got $5 billion worth of Bitcoin on his balance sheet, and his average buy-in price is something like 38 or 32K or something. Well, guess what? A market capitulation would mean that the price comes below his break even, pops up, rejects at his average entry, and then keeps going down. That would force him to sell to satisfy what his shareholders want him to do. That would be a market capitulation because he's got like, what was it? Basically 130,000 Bitcoin. Okay. So think about that for a second. Even if he was to sell half of that or take profit on half of it, you would just see it would just wipe the order books clean. It would just be an absolute fucking catastrophe. Okay. You're talking a $10,000 drop. Like it would be really bad. And that's what I mean by a market capitulation. Okay. So that's a good example of how this was a minor capitulation, and we have not seen any kind of, this was a minor capitulation. We have not seen any kind of market capitulation yet. Okay, we just haven't. That's my whole thesis behind the whole thing of why I think, okay, this could just very well be some kind of big expanding diagonal like this, and we still have got a ways to go until we bottom. But again, that's yet to be seen. Okay. I hope that kind of explains this a little better. Maybe I'll do the tutorial video on that, but that'd be like a really rough video to watch. Probably really low engagement on the YouTube algorithm. So that's mostly just for you guys. If you guys want more information on that, feel free to just ask me either in this Discord. I'm also in the Elevate Discord. If you guys are over there, feel free to ping me. If this kind of stuff interests you. It also might be a good thing for maybe a Medium article for those of you that like to read this sort of information. I've been debating whether or not I actually want to do a newsletter because I don't really write that much anymore. I'm a great writer. I just don't do it anymore. But this would maybe be more suited for an article instead of a video. I don't like doing talking head videos. They get boring. They don't get a lot of engagement. So anyway, so that's what is basically going on here on the daily chart. With all those other factors aside, regardless, this is a rising wedge that's bearish. We've had a bearish retest of it. We didn't make a full end-to-end on the cloud. That's another thing that I should probably explain to you. Those are, what the fuck is an end-to-end? An end-to-end is what everybody was hoping was going to happen here, right? Man, there's a lot of shit on the screen. So basically breaking into this cloud, right? So we've got this huge cloud above us. Okay, an end-to-end would have been breaking into here and then going all the way to the other end of the cloud. That is a hugely bullish maneuver for the price action on the Ichimoku cloud, especially on high time frames like this. Anybody that's using Ichimoku cloud on anything lower than like a 1 or a 4 hour chart is a friggin' idiot. This is a very, very good indicator because it has a lot of stuff that it combines, but it's practically useless on lower time frames. Just like there's a lot of other indicators that are useless on low time frames. This is one of them. I prefer to only use this on the daily chart to get an overall idea of what's going on. But regardless, we did not pull the end to end here, and we weren't even able to hold the 200 EMA as a retest, and that's not good. So we've seen a couple throwovers of this 200 EMA. Actually, just one other throwover here. Okay, back in December. We looked like we were going to pop above it. Everyone bought this bullish retest, and then it broke down in a major way. We even rejected off of our Tenkan-sen line here. Broke back above, stuck between our 50 and 100 EMA and our Kijun-sen line, broke back down, and it's just been a sideways battle here. And then this was our second throwover not able to hold that 200 EMA. So that's not necessarily a good thing. However, if the bulls want to fight back here and they do want to invalidate this pattern and not take another pretty serious move to the downside, this is the area to do it. Why? Well, look at how thin this cloud is here. The cloud is thinning out here because there's been so much indecisiveness in the market, right? There's a lot of indecision here. It's a lot of back and forth. That's what's causing the cloud to be thin. This is the bull's best opportunity to pull something like this and use that cloud as support and start moving to the top side here to finally invalidate this this whole overall pattern. But that's neither here nor there. We don't know what's going to happen. All we can do is read the signs and make our best educated guess that we can using fundamental and technical analysis. So let's do that, right? We have on the daily chart, we have obviously big bearish downtrend, right? So price structure first. We've got a wedge. We've had a throw over, hard rejection. What comes next? Well, rule-based trend lines, right? The wedge, it broke down. We've got a confirmation of a bearish retest. What comes after that? Volume. We've got decreasing volume. Now, the volume is bearish. However, it is decreasing. Now, we're going into a weekend, obviously, so that kind of makes a lot of sense that it's decreasing. I personally don't trade on weekends because of that. I personally don't trade on weekends because it's lower volume. Plus, one, I just moved. I like to spend time with my family and do the damn thing, and be that wholesome dad. So I don't work on weekends. But anyway, the volume here decreasing. This could be one of two things. Okay, we could be seeing a switch into bullish momentum and maybe see a green week next week, or we're just decreasing for the weekend and then we keep getting some big, bearish bars here. So there's a couple of things that can happen with that. So we don't have a confirmation of a cross yet on this, on our MACD down here on the daily time frame, but that's to be expected. Obviously, there's 8 hours left in this candle. So let's kind of break it down a little bit. One other thing I want to point out is our RSI up here. It can't even break into the no man's land. In that mid-range between 44 and 56. It's just hovering down here in this lower part of the range. The price is grinding lower, and the RSI is just pretty much staying the same here. You might be able to call that and get away with calling that exaggerated bullish divergence, that we're getting a lower low in price and a same low and an equal low on the RSI. Technically, that's exaggerated divergence, but that's actually the weakest divergence that there is. So I wouldn't really think too much into that right now, unless we start seeing some really big, like hidden bullish divergence, which is the strongest. I'm probably not going to be playing a swing on this chart yet. Anyway, so let's break this down to a 4 hour now. Kind of see what we have going on here. Hold on one second, guys. All right, sorry about that. Anyway, 4 hour chart here, right? So there's a couple things going on with this. To me, honestly, like this really looked like diamond pattern things happening, but those were like on the lower time frames here. I think I had that earlier in the week, and then I deleted it or whatever. But in general, this is very, very choppy, even here on this 4 hour chart. Obviously, in general, the trend is down from here. So there's a couple ways, I guess, that you could analyze this. Some people prefer to draw their trend lines like this. That's really not my cup of tea. I normally don't do that. If anything, I'd be drawing trend lines here somehow. and doing something like this and placing it as some kind of an expanded diagonal, this being my first connecting or my second connecting point on the bottom, this one being my second connecting point on the top. I don't use wicks anymore. I don't use the highs because low volume, it's just an illiquid asset. It's only got like a, $1 billion, couple, $100 billion market cap or whatever. Or I think it's up to 1 trillion or 2 trillion now or something. But in general, it's still really low. But anyway, I take these and I use the candle closes. I find it to just be a little more accurate. Okay. In the long run. So if this is going to be an expanding diagonal, it's not looking too hot here on the 4-hour chart. Again, the volume is decreasing here. You can see this clearly even on the 4-hour chart. Okay, the volume's decreasing. Our indicator, for the most part, are flat. We're making equal lows, but we're also making equal highs here as the price is chopping around. So we don't have any clear direction here. We got one pop. We had a full retracement. Now we had a full retracement again to the top side. The RSI is all fucking wonky and all over the place, looking like a roller coaster. It's just not good trading in here. So I'm kind of glad that all of this has been going on while I've been moving and stuff, because this is really rough to trade. You had a full 100% retracement here. Then you had a full V-shaped recovery and a continuation here. It looked like we were going to go higher. We had a hard rejection at this resistance. We grinded down. We had a pop, huge 100% retracement again. This is rough in here. Lots of really big peaks and valleys here. It's just really, really rough trading. So if you got chopped up in this, I mean, it's part of the learning process. You don't really know what's going to happen. But in general, if you zoom out just a little bit, this entire structure down here has been like this, right? Huge move to the downside, V-shaped recovery, 100% recovery, rejection. Huge move to the downside, 100% retracement from where we previously came up, right back up to the top side. Huge rejection, 100% retracement from our base. I mean, it's just been happening over and over and over here. Just back and forth, back and forth, back and forth in a huge, just kind of triangle type situation. This was going to be our chance to be breaking out. This was that area where we had broken above the 200 EMA. It just did not hold this support here, and it broke down on these lower time frames. But now it looks like we could possibly be making a slightly lower low, and maybe now this is looking like this is going to be our base here. Okay, something like this in this area. Okay. Something like that or whatever. Let's draw this a little better, right? Yeah, something like this would be our big base. So this is going to be like a major support area in between 38.5 and 37.5. So a little $1,000 limit. Again, not too much to really go over on these indicators here. There's not very much going on. 1-hour chart. Now, these levels I already had drawn. Okay. Yeah, we were not able to break above this 39.3 resistance. So 39.3 is looking like resistance, and it's looking like we used an intermediate area as a base right here from these previous lows as like a little interim support here. In general, this is looking really volatile, and this whole move to the top side, like when the price grinds up like this, and you start seeing bigger whales posting on Twitter that they're getting frustrated because the price isn't naturally filling their shorts. It's like grinding up on no volume into their shorts. This is what they're talking about. Look at this structure, and now look at this volume. See how low this volume is compared to back here and here? Okay, these are bigger moves. This is like not a move. But the price grinded up, from, where is this, 38 to 40. So the price grinded up $2,000, but there was basically no volume here. Okay, that's a huge red flag. Normally that means that there's no spot volume in the market and it's mostly derivatives. And it has been. You can easily tell that by going over to High Block Capital, checking out their liquidation charts and saying, oh, yeah, look at this. The whole time that this price was grinding up, all it was doing was liquidating people, right? This whole thing up, it was just liquidating people. there wasn't very much spot fueling these moves. It was mostly liquidations on derivatives exchanges. Okay, that's not a good thing because that means that the price action is not organic because not being fueled by spot purchases. When the price action is being fueled solely by derivatives, it's a weak market. Like that's not good. That means it's susceptible to it's more susceptible to manipulation. And the market in general is going to chop around, and it's going to be very difficult to trade with very large swings like this in either direction because there's no organic interest in the market. This shows a lack of interest in the market. This shows participants not entering, and the ones that are already participating are stopping to participate. You know, they're just not participating anymore, and they're exiting or they're sitting on the sidelines. I will tell you this though, there is tons of liquidity sitting on the sidelines. I've got tons of liquidity myself sitting on the sidelines waiting for all these things to fucking bottom. Okay, so I know that if I'm doing that, I know that millions of others are also sitting on the sideline just waiting to see what's going to happen, waiting to see how is this daily pattern finally going to resolve itself? Is it just going to get a throw over here and the pattern is going to fizzle out and just invalidate itself by not doing anything? Or was this the rejection and now we're expecting a pretty significant move to the downside as another major buying opportunity in this area of weekly demand? Me personally, I'm waiting for the weekly demand. I would love to get in here and accumulate some spot, but honestly, I would love it to go way low. I'd love to see 25, 28K in here. Am I going to get it? I have no idea. I don't have a crystal ball. If you do, please, I'll dox my address and you guys can send that over to me. Thank you. Let's come down to a 15-minute chart. Maybe we see some, maybe we see some kind of scalping opportunities here, and then we'll take a look at our order blocks as well on the 15-minute chart. And then after that, I'm probably going to call it a stream. It's already 11. I know I started a little late, but I also want to make these videos. I am recording this today. For those of you that were in the last one and I said that I was going to upload it, I just completely forgot. I'm very sorry. This one, I'm definitely going to upload. And right after I finish this, I'm going to finish editing that tutorial video that I have for you guys. And I'm going to upload that probably on Monday. That's probably going to be a Monday video. I want to make sure that it's edited really good. I've been working on that tutorial on how to, basically the tutorial that you'll be expecting. Please follow me on my YouTube. There's tons of information there in this Discord. I also have the archive of just the tutorials that I've done for members that are a part of the premium Discord. I have like an actual full-blown training course that's not available publicly on YouTube. All of those are unlisted and those are only available here in the premium side of the Discord. If you guys are interested in getting more professional training, really improving, you know, your fundamentals of technical analysis and stuff like that, I highly recommend that for you. But anyway, what you can be expecting from the tutorial that I'm going to post on Monday is basically going to, and I'm going to use this pattern basically as the example. I'm sure I'll use some others as well from the past. But I'm going to show you how you can use volume to determine if a pattern is going to validate or invalidate itself. Okay. So right now, I'm assuming that this pattern is probably going to invalidate itself. Okay. Most of the volume throughout all of this down, you know, obviously it's a downtrend. Most of this volume is, you know, bearish or whatever. The bullish volume that we've had in general compared to everything else has been a lot lower. And in general, the volume is decreasing through this entire thing. Okay. So you can use volume to determine if a pattern is going to validate or invalidate. And in that tutorial, I'm going to go into a lot of detail on how you can use volume and other forms of analysis to determine if that is going to happen or not. Okay. Let's get back to this 15-minute chart, see if there's any scalping opportunities here. So it's looking like earlier in the morning or overnight, it's looking like I missed out on a short, but to be honest, I probably would have gotten really chopped up on this. There was a short opportunity here yesterday. It came right back to entry. That would have been a break even or a loss. It ended up grinding higher. Where else would I have shorted? I probably would have waited till up here to be shorting. So this up here would have missed my entries. I would have never gotten filled. I would have been shorting this resistance up here. It got front ran. So my asks wouldn't have even gotten filled in this area between like 40.3 or whatever and 41K. Wouldn't have gotten filled up here. So I would have missed that. And even if I would have market entered, on a short here, the price would have moved higher. I either would have gotten stopped out or just gotten frustrated on all of this, on all this nonsense in here. So there really haven't even been too many scalping opportunities on Bitcoin because the price has been moving so slowly on very, very little volume here. Very little volume. I don't like trading very low volume scenarios like this. It just, again, it shows weakness in the market. It shows a lack of participants willing to be trading on spot, which is not good. Again, that means that it's all derivatives volume, which is, when you start seeing this kind of bullshit here, you got a $2,000 candle and then a full retrace with some scammy bullshit wick. That's not fun price action to trade. I would rather just sit out and not expose my liquidity to nonsense like that. Now, I will tell you one thing. On the lower time frames, this, and I think I went over this in one of my 90-second videos, is this was the perfect shorting opportunity. How do you know that? Well, I mean, again, it all comes down to price structure first, rule-based trend lines second, and then volume. The volume was the biggest determining factor here, right? We had all of this bullish volume. It was a great uptrend here. The bullish volume was, in general, it was increasing all through here. It was really good. The volume was consistent with the price action. Everything was awesome. And then what happened? The volume immediately died. It went directly below the explosion line, and then it turned bearish up here while the price was just remaining flat. So what do? Well, you've got rule-based trend lines, right? So you've got a range here, right? You clearly have a range here. What happens when that range breaks down on very, very low volume and the volume is bearish? That was just screaming short. Unfortunately, this happened while I was still moving and building stuff at my new house, so I wasn't able to take this. My algo took it for me. If you guys want more information on that, there's info in the Discord if you want to just have something to supplement your income or whatever while you're still getting your trading education. I highly recommend doing that. It's not meant to be the end all be all, and don't expect it to make you $1 million in a year. I mean, it could if you put in a lot of money, but in general, it's a good way to supplement your income as you're still learning and taking your own trades for yourself on your main account. You can have it trade a couple grand or a couple hundred or whatever for you. And, at least it'll take trades that, you might not be sure of. And, the algo takes it for you with a small portion of your portfolio. Maybe it's right, maybe it's wrong, whatever. But either way, you learn from it. But anyway, rule-based trend lines, right? So once we had this breakdown of this, certainly this level here, okay, like this candle close, if you didn't get in here, then you pretty much missed the move. But I tend to use the lower limit from wicks like this that were screeching to the top side before the move finished. I normally like to use those as my base instead. Normally what ends up happening when you do that is you get in a little bit earlier and you get a little bit better of a price. Same thing works for the, if the move was going to the top side as well, right? We can show an example of that. So here, right? This move to the downside, right? We've got this support base. Once we flipped this into support, this was the long. Okay. So you've got this area here. Okay. That was kind of like a no man, really, really choppy area. And then once it broke out of this, that's it. That was the long here. So you would have caught this, say here, stop loss below here. You would have entered on this big green candle that closed and broke above this entire range here. This candle would have been your entry. Your stop probably would have been initially below that candle. And you probably would have been exiting up here on this shit volume. 3-to-1 trade, that's not bad. And then you could have ridden that all the way back down on this minimum of this candle breaking here, probably a stop above here. And you would have ridden that all the way down. Obviously, you're not going to catch the bottom, but that was another 4-to-1 trade. So this was like a gimme. Those were 2 gimme trades here. If you look on the 4-hour chart, Was it no, it was the 1 hour chart. So 1 hour chart, it was even better, showing the volume here. See these big sweeping arches, very, very smooth transitions in the volume here. This is what you want to see. This is good price action to be trading. When there's good volume and the volume is really sweeping and it's arching and it's doing what it's supposed to be doing, those are the kind of trades that you want to look at getting into. When the volume looks like this and it's low and it's really choppy and now it's like it's extremely inconsistent. There was no volume here at this top. So this was definitely, that was a short signal here. When there was no volume up here, that was a short. The price had nowhere else to go and it was almost at resistance. That was a short. I just happened to get front ran. My bids never got filled up here. So I got front ran on that. But anyway, that's the kind of, this is why trading volume is so important. Once I started focusing more on volume, focusing on open interest, looking at liquidation levels, taking geopolitical factors and analytics from legacy markets as well as digital markets and stuff, and putting all these things together to form a bias or form what kind of trade that I'm looking to get into. Once I started doing that and really focusing on volume, I started making tons more money. And this is something that I've only done recently. Like in the last 2 years, I've been trading for 10 or 12. I started trading in 2010 futures, and like I started with like futures and commodities and stuff. And then I started going to like stocks, and I dabbled in options for a little bit. Then I found crypto in 2016. And I haven't been trading that exclusively because I trade Forex as well on a fairly regular basis. But for the last 5-10 years, it's been mostly Forex and crypto. So, that's pretty much it. And then recently, like within the last 2 or 3 years, I really started focusing on volume. So it's always price structure first, rule-based trend line second, volume third. And then if you want to look for confluence with Ichimoku Cloud or Fibs or whatever, you can absolutely do that. And it's just going to give you more confirmations that your trade setup or your trade idea is either correct or incorrect. The more confirmations you have and the more types of confluence that you have, whether it's supply and demand, a trend line, the volume, Fibs, Ichimoku, whatever you want to use, however you trade, whatever indicators you use that you want to combine, use those one by one, look at those same levels, see if there's confluence with those, and then make your trade setup. Ladder in, ladder out. Very simple. Don't go crazy on the leverage. I only use 5x max ever. I never use more than 5x leverage. My algos that trade for me, I think that those are only, I think on FTX, they're only trading on one or 2x leverage, something very small. Like I don't use leverage. It's just not worth it. Yeah, sure. You've got the opportunity to make big gains, but when you're wrong, and trust me, you're going to be wrong a hell of a lot more than you're right. Man, those losses add up really, really quickly. And then it's impossible. You just keep digging your portfolio in a hole because if you're down 50%, you have to make a 100% gain to get back to where you were. That's how math works. That's how percentages work. And if you start losing a lot, you really start, digging your portfolio into a hole, and it starts getting very, very difficult to dig yourself back out. Whereas if you're trading with less leverage and you're limiting your losses and you have a good risk management plan and you're laddering in and out of your entries, you're calculating your position sizes and only using, like a fifth or a third or a quarter or whatever you're comfortable with of your trading portfolio to trade, then you'll be a hell of a lot better off in the long run, because you're not going to be one of these guys that's going 50x, 100x leverage on every single trade and then losing 5 or 6 out of those 10 trades. And then even if you won 6, those losses were so massive. Even if you won 6 of those trades, your 4 losses were so large that even though you won 6 trades, you're basically just a break even. You didn't make any headway because you were constantly using high leverage and probably no risk management. That's not really the way to go. I like to trade in a fashion that I can lose 6 trades and win 4 or 5. Well, 3 or 4, I guess, and still be in the profit. Why? Well, because I keep my losses super minimal. I'll only accept maybe a 2 or 3% loss per trade, and that's without the leverage. Okay. So, when you start limiting your losses like that and you ladder in your entries and you're putting areas like this of supply and demand and not trying to pinpoint, okay, I'm going to enter right here on this way, it's just like you can't, it's a 5-figure asset. You can't expecting to be nailing like to the dollar levels. It's just not going to happen. Draw areas of supply and demand, ladder in those areas, put a stop well below, check out what the liquidations are at, put your stops outside, of where those liquidations are. Like right here, you're looking to ladder long. That's great. Don't put your stop in here, put it below this level of liquidations, right? In this white space here. So that way, if these liquidations get swept, you've got a higher chance of there being support here and not getting stopped out. And if you do, well, now you've got an opportunity to enter in lower. Why? Well, because there's another liquidation block here. Okay. That's how this works. Don't put your stop loss in here with everyone else's. Put it outside of that. You want these people's liquidations. You got to trade with the smart money. This is how smart money trades. You have to put your entries where other people's liquidations and stop losses are. You want to be buying their bags when they have to capitulate. That's the name of the game. You want to be buying somebody that's getting washed out. You want to be able to buy that bag from them. And then the price will turn around. And you know that it happens all the time. I know it's happened to you guys. It's happened to me too. It's like, oh man, I can't believe it. I just got wicked out. And then the price turns around immediately. Why? Why does it do that? Why'd you get stop hunted or John Wicked, whatever you want to call it? You got stop hunted or John Wicked because you put your stop loss in a liquidity pool. It's very simple. The exchanges aren't stop hunting you. The exchanges the exchange is the exchange. What's happening is the price is going to gravitate towards the area of least resistance. If you've got way more liquidations on one side of the price than the other, chances are the price is going to gravitate towards where that liquidity is. Well, if your stop loss is right smack in the middle of that liquidity, you're not getting wicked out. It's just you had your stop loss where everyone else's stop loss was in the middle of a liquidity pool. That's where the price wants to go because that's where the liquidity is. It's once these things start clicking, and you guys get more of a handle on this stuff, I promise you'll turn into better traders. Again, it's not going to happen overnight. I've been trading for 10 or 15 years or whatever, and I'm still learning new stuff every single day. So anyway, I think that's pretty much going to do it for me, guys. I really hope that you guys enjoy your Friday afternoon. I'm going to be upgrading all of my cabling and stuff for my internet over to my computer today. So I'm going to be working on that. I am going to get that video tutorial up for you guys on Monday. So make sure that you stay tuned for that. If you guys are interested in more education or automated trading systems or whatever, check out all the information in my Discord. Just explore it. There's tons of free tutorials. There's training courses for paid members and all of that good stuff. In the next coming weeks, I'm probably going to end up merging my Discord with Elevate Trading. So I'll have more news on that to come as I iron out those the business agreement and the details with Crypto Warrior from the Elevate Trading Group. I'm really excited for that. I also have a new algo that I'm going to be releasing soon. It's going to be for Link. I've already had it done, but I've just had it continuing its back test and just letting it trade and do its thing for, I think, another 2 months now. I've had it done for 2 months, but I haven't released it publicly because I want to make sure that, especially trading like a lower volume altcoin, that it's going to perform really well. So you guys know me. I don't want to just put shit out there that, so that I can make money. For me, it's not about the money that I make off these products. That's why I hand them out for fucking pennies on the dollar compared to what everyone else sells their shit for. Because I don't care about that. If I want to put a product out, especially that's going to take control of a portion of your portfolio and trade it for you, I want it to be the absolute fucking best product that I can possibly manage to put out, because I'm using that to trade my own funds. If I wouldn't feel comfortable with it trading my funds, I sure as fuck wouldn't sell it to trade other people's funds. That's highly irresponsible. That's not what I'm after. Those of you guys that have known me and been around for a while, you guys know that I pride myself on transparency and integrity. I never put out bullshit products ever. And if there's a problem with one of my products, I'll either recall it or I'll fix it immediately. But anyway, I really hope that you guys have a wonderful afternoon. Those of you that have been around for a while, I appreciate it. I appreciate the patience while I get settled out here in a new state. And next week is probably going to be a normal week. My wife starts her new job on Monday. So it's definitely going to be a normal week for me. My daughter gets back into daycare on Monday as well. So this weekend, I'm going to be catching up on client work, doing what I got to do, hopefully getting ahead of the ball game, finishing up the edits on that tutorial video for you guys. And then I will see you all on Monday. Have a beer. Cheers. And until Monday, happy trading.